So here are just some of the key findings from the California firms. So the first one, consistent with the national survey findings, was that a majority of the firms continue to experience negative impacts from the pandemic, and that about 70% of all California firms reported being in fair or poor condition, compared to the 61% from the 2020 survey. And then finally, I think this was consistent from what we heard in the earlier panel, was that almost 3/4 of all the California firms sought funds that do not have to be repaid. So they are accessing a lot of the grant funds that are coming, especially from the federal level, through grants and PPP loans. Next slide, please. So here's a quick profile of some of the California employer firms who responded to the survey. This is fairly reflective of the national responses as well. As you can see, there's a wide range of how long businesses have been around. Still, a majority of firms are owned by men, and more than half of the firms who responded were 4 employees or less. And then compared to the national data, California is slightly more diverse in terms of business ownership. Next slide, please. So here's just a quick summary again of the financial conditions at the time that the survey was taken. So again, about 70% experiencing poor to fair financial conditions, and only about 9% reported that they were in either very good or excellent. Next slide. Here are some of the top financial challenges that some of the firms reported. At the very top, of course, like Sarah mentioned, which is consistent with the national survey results, was paying for operating expenses. And then tied for second is weak sales and uneven cash flow. And then a third also reported access to credit availability. Next slide. And then this shows a breakdown. Again, this survey included pandemic-specific questions, so the next couple slides will speak to that. But here's a cut of the various pandemic-related financial assistance that California firms sought applications for. So EIDL and then the PPP programs were the top getters. And then for the most part, a lot of, again, the grants from local state government as well as from nonprofits and foundations. Next slide. So here's again, speaking to why firms did not seek pandemic-related financial assistance. A majority reported that they just did not think that they would qualify. And then a third reported that they did not need the funding at all. And then kind of to the earlier question, others found that the programs were too confusing to navigate, time-consuming, and then also that it did not fit their financial needs. And this is a cut of the responses of how and where they're accessing financial assistance. And as you can see, the banks are, the respondents are predominantly going to large banks still. And then there's a spattering of small banks, other business financial services companies, and then as you can see, accessing financial services from CDFIs is at about 3%. And then here are some of the reasons why California firms reported about why they're not using banks. And a majority are reporting that costs and fees are still a big barrier. And then another is that they would not meet some of the bank requirements. I think we heard earlier about having a big enough balance sheet. And then also, almost 27% reported that they thought that the bank wouldn't want to work or would be willing to work with businesses like theirs. And then other reasons fall under just kind of lacking trust, or that physically or geographically they were a little bit more inconvenient or inaccessible. Next slide. So consistent to the earlier slide of kind of the challenges that firms were facing, so here are the reasons why they applied for financial assistance. So again, to meet their operating expenses. and then generally to help expand their business, to acquire assets, and then also refinance or pay down their debt. Next slide. And then another cut of the data where California firms did not apply for financing. And so again, over about a third who said that they had sufficient financing already, but then mainly because other barriers, like they felt that they were discouraged from applying, that the banks would not want to provide any assistance to them. They did not want to carry any additional debt. And then again, the application process was a little too difficult to navigate. Next slide. And then of the firms who reported being discouraged from applying for financing, some of those kind of more detailed reasons why was that because they reported that they had lower or weaker business financials, and then they felt that the lending requirements were a little too strict, so kind of speaking to the barriers about underwriting. And then again, this perception that lenders do not want to provide financing for businesses like theirs. And then here are some of the different types of financing and credit products that California firms sought in the last year. So a huge majority of that was in loans or lines of credit. And then again, about a third looking for a credit card. Next slide. And then this is the application rate of the type of credit. And so the SBA loan is still quite popular. But again, applying for business loans and other types of lines of credit. Next slide. And then again, where they are accessing these lines of credit or other cash advances, they're still turning to the large banks. And then others are turning to smaller banks, online lenders, finance companies, and then again, credit unions and CDFIs are still kind of at the bottom of where people are turning to. So this was not in the full kind of slide deck of the California data. So like Sarah mentioned earlier, all of these reports are available online at the fedsmallbusiness.org website. And like she also mentioned, there's different cuts of the data as well. So please feel free to head over to that website and explore all of the reports. There are other interesting kind of like cuts of the data from the 2021 survey. And then Sarah is working actually on more state-specific reports for our district. And so we hope to have that kind of uploaded and available on our website to share as well.
And just to follow up on one thing Tracy said at the beginning about breaking out state-specific data by race and ethnicity of owners. That's something we hear a lot that people want to see, and we understand that that is important data. I'd say California in particular, came very, very close to being able to do that this year. The survey responses, as we mentioned, were over 700, and we just needed a few more to be able to break it down in a way that's statistically significant. So just another plug, please help us get the word out. The more responses we get, the more we can do interesting things and different analyses with these data, and so really want to try to get as many responses as possible, but also that we are working with our research team to figure out if there's other ways we can look at it, maybe unweighted. This is where the people who have the PhD in statistics make the decisions. I do not, but I would just say that we hear you, that this is what people want to see, these types of breakdowns, and we are working to try and figure out how we can get there even with smaller response pools. And then again, just another plug, this will be in the deck that you received, but there is a link here. I think Cameo will be sending out the link as a partner.
We're going to be sending out the full slide deck and all of this information in our follow-up email to you all.
And then particularly on the survey, please help us, however you can spread the word. Numbers were great last year, and we're really hoping to do even better this year.
Are there some questions? Let's see, anyone who has not had, Natasha, did you get a chance? Yes.
Hi,